We do know that interest rates have to come down. It's not a matter of if they're coming down, it's now a question of when they're going to come down.
Welcome to another episode of Race and Ramiro. Today we've got a special guest, Eran Obadia from Outline Financial. He's going to be here talking to us about some of the mortgage intricacies that we're facing.
Interest rates, all kinds of good stuff. We love Eran. Thank you for being here.
Thanks for having me, guys. As always, happy to work with you guys and spread the knowledge, share the wealth, etc., etc.
Yeah. Well, and you are our go-to as far as mortgages go. And I know I'm always calling you and asking you a ton of questions about what's happening in the market. So what's happening in the market right now with mortgages and interest rates?
Yeah, great question. Comes up quite a bit nowadays. So as we know, Bank kind of held on the last one, March 6th. I think that was the fourth consecutive rate hold. Speculation now is what's going to happen in April. As always, it's going to be data driven. So how does the inflation reports look like, the jobs report, what's going on in the US? We do know that interest rates have to come down. It's not a matter of if they're coming down, it's now a question of when they're going to come down. Analysts, so we have data from all the 6 major banks. And so some are a little bit more aggressive, some are a little bit more conservative. But all across the board, they're saying that interest rates, the Bank of Canada overnight rate should drop by anywhere between 0.75% to 1.25% this year. So that's anywhere between 3 to 5 times this year. Now,
because they're only going to drop it 0.25%, right? 25 basis points at each one.
I can't imagine they're going to go more than a quarter in one given drop.
Well, there's only 8 announcements in the course of a year, right?
12. Sorry. 8. You're right.
In the course of the year, we've already had.
We've already had two.
Yeah. So we still got the potential. What I heard overall, like looking kind of forward, was that by the end of 2025, the goal is 2.5%. So bringing it from 5 to 2.5 over this period of time.
I didn't realize they were going as low as 2.5.
This is the narrative, and I know Eran was just mentioning about April, because once again it was June, July. And there was a couple of economists and different people saying perhaps even as early as April.
Mm-hmm. I think they might go in April based on everything that we're seeing now.
I actually saw another article that suggested that Bank of Canada may not drop in April because they don't want to overinflate the spring market.
Wow.
Right? Because
which
is already going on.
Yeah, has been quite aggressive
bidding
already.
Wars everywhere.
Right? Yeah. So obviously there's a lot of unknown speculation, guesses, right? So obviously time will tell. We know, as you said, rates are there. They want interest rates to come down to about anywhere between 2.5% to 3% by the end of 2025. Wow. So it's just a question of how quickly that's going to happen, right? So they're saying 3 to 5 rate drops this year, and maybe another 4 more the following year, and you get somewhere in that ballpark range. We're at 5% now, so for it to get to 2.5%, there would have to be, what is that?
At a quarter point.
Yeah, 0.25%, 10 drops.
Yeah, and they could always do 0.5% here if need be. But like you're saying, so it's a funny kind of catch-22 because we have this high inflation. Obviously, the cost of borrowing is included in that index, the way that they calculate it. If they reduce it, then it's going to, like you say, inflate it, which is we've already seen multiple offers everywhere.
Well, and then you have,
for sure.
Right. And you've got more buyers coming out, but what happens is there's not enough listings. So then if you lower the interest rate, the prices of the houses will go up automatically because they're already going up now. Now I'm not seeing them go up dramatically. Like we did an offer this weekend. In Vaughan, we had 4 offers on the property, and it actually sold at the price I thought it was going to sell at. It didn't go crazy over where we had seen that last year, where property would sell, $200,000 over where the last sale was. Right. But if they drop the interest rates and more buyers come out and the sellers aren't out, that's where we're going to be in trouble, I think.
Well,
supply and demand, right?
I did see one here in Etobicoke. We didn't actually bid on it because once it got to 11 offers, my client just said, forget it, because he has a budget that he's trying to stay within. And but there was a 3-bedroom with the basement apartment and a garage that was around the corner, and it sold for $125,000. This one we looked at was $988,000 with an offer date. And so I was pegging it, no garage. It's a 2-bedroom. The basement doesn't have the kitchen apartment set up. nicely done. So I was pegging it around 115 and it went for 1.27.
Get out.
So clearly
Yeah, there's a
it's-
demand.
There's a demand out there. Yeah.
And especially for a 2-bedroom, it's not like you can create a 3rd bedroom out of thin air.
No, I mean it's a nice lot and you can always build up, but the place was renovated. So
Yeah,
so
but
this is what we're seeing. And yeah, if the rates do start to come down, it's going to just push it up, right?
Right. So there's two parts there to this because we've already seen some rates come down. This is why I speculating that why we're seeing a nice spring market right now is because the fixed rates have already come down in anticipation of where Bank of Canada is heading.
So, Eran, these are the fixed rates that the banks and the financial institutions are offering,
Correct.
right? The lenders. Okay.
Right.
Which is tied to the bonds.
Which is tied to the bonds, right? And the bonds are going to are behaving they're behaving in such a way that how they expect the market to behave, how they expect interest rates to go down. That's why the bond yields are coming down. So one would then argue is that if Bank of Canada starts dropping rates, subsequent drops, then the bond yield will also start dropping with them in advance, right? So either which way, we're going to see interest rates come down, both fixed and variable, which is great for buyers because now that increases the purchasing power, right? How much, it really just depends on what other liabilities they have, their incomes, etc. But any decrease to interest rates increases their mortgage qualification.
And for the buyer, so for example, if you have a buyer now that's approved, but they're not closing till, let's say, May or June, then if there is a rate cut announcement, they may be able to take advantage of that where you can get them a lower rate.
100%.
Okay, even though they bought now.
Even if they buy now, and let's just say they have a May 15th closing, with most lenders, we have the ability to reprice their mortgage. So if interest rates are coming down, we're able to drop their interest rates with them. So essentially, they're buying at today's prices, but can still take advantage of further rate cuts down the road.
So would you say a lot of this is tied in? Well, there's two angles to this. Obviously, you said at the very beginning that it's not a matter of if, it's a matter of when. And obviously, we've got a ton of mortgage renewals coming up in the next 12, 16, 18 months, right? Going into 2025. So as you're saying, they have to, otherwise there's going to be a big issue with defaults and people not being able to renew and stay in the house that they're in.
So yeah, we're going to see, lenders don't want to kick their clients to the curb saying too bad, so sad, right? They're going to work with you. If you're struggling, speak with your bank, get ahead of it. Don't wait till it's too late. You don't want to get to a situation where you're missing payments and then going into like power of sale. But if you're struggling, speak to your bank, see what they can do in terms of stretching your amortization, decreasing your mortgage payments, or something of the sort that's going to help you navigate this
for the next period,
until
right?
Interest rates start coming down. What we're also seeing is, people are not just simply renewing at this point; they're actually trying to refinance to either wrap in some debt that they might have already accumulated over the last couple of years, or if they simply just want to be able to take their 25 or 20-year mortgage that they have and reduce their mortgage payment, we can extend the amortization back to 30 years.
So, and if they're staying with the same lender and they're just renewing their mortgage, they don't have to go through an approval process again,
Correct.
Right, and requalify.
Correct.
It's only if they want to refinance, meaning they want to go with a different lender or they want to change their amount, right, of their mortgage, then they have to go through the process. Because some people are really worried saying, I don't know, they don't know if they can actually renew at the same rate, but it sounds like if they're staying, they don't have to worry.
As long as they've made their payments and not behind on their payments, then the lender will renew their mortgage. When you're renewing, it's important to understand that your amortization stays the same. So, if you had started at 25 years and 5 years later, your amortization is now 20. So your payment when you're renewing your terms are going to be based on a 20-year amortization. Now, if you're coming out of 1.79% going into 5.25%, you're in for kind of a sticker shock here in terms of what your payment's going to be, right? Which is why the bank could even, now we could look at the option of maybe extending that amortization, giving you some of that payment flexibility back.
And 30 is the maximum.
30 is
right now. Have you seen any go to 35 yet? Or is that just talk? Is that rumor?
Alternative lenders can go.
Okay.
We have alternative lenders that can go beyond the 30 years because they don't follow the same rules that the major banks do, right? But no, I haven't heard any on the major institutions going more than 30.
So some of the doom and gloom that's on the news saying, oh, there's going to be millions of people defaulting, it's going to be a disaster, that probably is not going to happen.
I can't imagine.
I can't imagine either, right?
That the government will allow that.
Roll the dice on that.
The most important thing is just don't wait till it's too late. Approach it early. If you're feeling that you're struggling, then reach out to your bank, reach out to your financial advisor, reach out to your mortgage broker, whoever it is to help you navigate the scenario. You have more options at the beginning stages as opposed to later on when you're now missing payments. Because when you're now on your credit bureau, if you've missed mortgage payments, that's not really an attractive option. You're not an attractive borrower to other lenders,
Of course.
right? Because now you're a higher risk.
So just to switch gears a little bit, let's talk about first-time home buyers. And what would your advice be to a first-time home buyer? Because right now the prices, I know, Romero, you mentioned there's a couple that seem to be going over asking, but the prices seem to be a little bit more reasonable right now than at other times. So what advice would you give from a mortgage perspective to a first-time home buyer who's trying to get into the market?
So first things first, get pre-approved, right? Like find out what you can afford, not just on paper in terms of what you can qualify, but also what your monthly budget is, and are you comfortable with the mortgage payments, property taxes, maintenance fees, etc., if any, right? So number one, get pre-approved, and that'll be the biggest gauge, your best gauge of affordability. And then working with someone like a mortgage broker who's not tied to one bank will then also be able to identify other features of the mortgage that are important to you. Maybe you are rate sensitive, in which case there are great lenders out there who are going super aggressive with nice rate discounts. But maybe you're not. Maybe you want the ability to pay down your mortgage quicker, right? And maybe so, for example, you got some lenders who only offer you 10% per year, and you got lenders who can offer you 20. So if you're, for example, heavily commission based and you want to pay down your mortgage aggressively, then you want to work with a lender who's got a little bit more flexibility, right? So understanding that not all lenders are the same. So simply just walking into your bank, you could be limiting yourself drastically just based on whatever product or feature that one lender has.
So that's a good segue, because the one thing we did want to ask, kind of final question, which Raisa was nice enough to send through yesterday, was so speak about like what is like the interest rate isn't the most important. Like you said, there's that product that you're getting. It could have portability. There's different things, prepayments. Like there's different. It's not just the mortgage rate itself.
Mm-hmm.
Maybe you can talk a little bit about that.
Right. So going back to that, so there's your rate determines your payment. That's all it does. So if you are, if you're limited onto what you can afford, then yes, you obviously want the lowest payment possible, right? Understanding what features of the mortgage are important to you. So like portability, prepayment, mortgage
penalties, right?
For penalties, how penalties are calculated also varies from lender to lender. And then you have specialty programs, or Ramiro just mentioned Purchase Plus as an example, which is a common trend right now for people who are looking to purchase and renovate at the same time. Some lenders offer home equity lines of credit, some don't, right? So it's more than just a rate. And so part of what I do is have that conversation, partly educating, because some people just don't know that these options are available. And for those that are available, just that know about it, just about identifying what's the priority list, what's more important to them. Lower payment. Some people want a lower payment, but they don't want to go with a 30-year amortization. They want to go with 25, right? They're comfortable with 25. They want the slightly lower interest rate that comes with it, right? So there's a lot of variables coming into play, and my job is to identify what lender or which lender, which product is best suited for their needs.
Well, we're certainly glad to have you here with us today, and to have you for all of our clients, because I think you are an invaluable resource on the mortgage end. So, and your customer service is just awesome.
Thank you.
So thanks for being here today.
Thank you, Eran.
Thanks for having me.
A pleasure.
Awesome.
Perfect. So I think we'll see you next time.
Hopefully.
Oh, yes. And next time, actually, there's going to be another announcement, which I guess we can give a little teaser right now.
Yes, absolutely.
We are going to be involved in a fundraiser. We'll have more details to come. It's a 10-week campaign. Technically starts March 21st. It's for the Leukemia and Lymphoma Society, bloodcancers.ca. More to come, but that's something that we also will be working on.
Absolutely. More to come on that. And take care, everyone.
Take care.
Thank you.